Good morning, traders. Welcome to Monday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, we always need to check the news so that we know what's going on and when, along with anything else that could be jumping up, any events or anything like that. And if we look at the news calendar, well, there's nothing that's going to take us by surprise today. We don't have any news. We've got some really small announcements at 10 o'clock with the CB employment trends and wholesale inventories, 3 and 6 month bill auctions at 11:30, but that's it. I mean, it's a dead quiet day today as far as the news is concerned. So with that out of the way, pretty straightforward. Now we can jump into some charts for today. Today being 3/8 of 2021. First up on the list is going to be the NASDAQ with some kind of interesting weekend movement here. We gapped up over the weekend and then gave everything back from that gap higher. It hasn't stopped going lower. The big thing that really stands out here is the fact that when the market created that little base from before, it tried breaking out lower and just got obliterated. So whenever we have a situation like that where it's trying to show a really strong level of support, it entices me to look to see if anything else stacks up in that area. We've had divergences all the way across the lows. Along with that, we have a bullish L4 and the previous broken L1 that sellers got just ripped in half through. And not to mention the previous major swing low at 12,306.50. Everything is stacking up as a level of support here. Swing longs and buyers in general are going to be watching this area very, very closely for continuation back up. Now, if the bulls fail here and it does end up rolling back lower, different story. Then we'll probably see this thing start barreling back through towards the, below the 306.50s and maybe even challenge that -1 DP at the bottom of the wedge. Over on the S&P, we've got a large wedge here as well, and more interestingly, this is actually coming back to the previous wedge. You remember the one that we had drawn a while ago across those highs? They tried breaking out across and failed. That was the start of that big drive lower. Guess what they came back to? Market came back, bounced off of that wedge, and rejected right back down again, and that's after that crazy weekend gap. So a lot of buyers are going to be looking to accumulate this area with the mindset of any buyers who were long over here, and this goes for the NASDAQ as well, kind of gapped up into that icing on the cake target. So now that it's pulling back, more and more buyers are realizing, wait a minute, I should have taken profit up here, and you can kind of see that follow through flush. But it's gone on so long now that it's becoming to be in a zone of value. If we look at the previous drive lower, that last dip was 2.25%. If we look at this most recent dip off of the highs, we're at 1.8%. So from a value perspective, if it does want to go just a little bit further, that 2.25%, you can see what lines up almost perfectly with that 2.25. We've got the bullish L4. We've got the 2.25% measured move pullback. We also have the -1.5 DP. We've got previous structure. Everything on the planet is looking for longs down here. And that's where that major bounce point is. That's what I want to see. Now, I don't know if the market's going to go down that far, but that's going to be the major area of interest. Over on gold, with the continuation of this much wider descending wedge, and the weekend gap kind of kicked it over the wedge highs a little bit. They tried breaking out above, failed at the lower high, failed at another lower high, and it's been getting obliterated ever since. With this big rotation to the downside, a lot of buyers were looking for a continuation move, and a lot of buyers got dumped on. That doesn't necessarily mean that the market can't hold a higher low and go ripping higher. It certainly wouldn't be the first time that it's done it. Cough, cough, hint, hint, wink, wink. But if it does want to break a little bit lower, it would make a lot more sense to see support bounces off of the -0.5 DP at the bottom of the wedge. They blew off the highs, so it wouldn't be a surprise to see it blow off the lows. It just makes more sense to see gold want to go a bit further down. So even though we are finding a lot of support here, and buyers will be taking low probability longs in the sense that they can buy in with a very small stop, but the targets are way the heck up here. So low probability in the sense that it's not likely going to work. The stop is very close to the market. But that said, if it does find support and it does start ripping higher, it definitely compensates for the lack of probability. Then we've got crude oil, which is finally pulling back. We had a weekend gap to the upside. It ripped the market back up to the highs, almost broke in towards 68, just popped before it and then rolled all the way back down to 66. This thing is starting to feel like a penny stock at this point. It's kind of ridiculous. We've got a really, really big pullback, and realistically, a lot of the buyers who've been looking for this move, they haven't had a chance to really get a pullback ever since the breakout. Well, that breakout, the shallowest pullback they had was an L1, and they're finally pulling back to an L1, but there's nothing happening there. So the next logical step would then be an L2. The L2 is at previous structural support. It's at the base of the ascending, I was going to say spike and channel, but it's kind of like a spike and megaphone. We do have some caveats. We do have divergences going across the highs on that rally higher, that weekend gap top, which could cause some problems. A lot of times when we have that, especially with an overextensive move to the upside like we've got going on crude oil, it wouldn't be a surprise at all to see this coupled up with another couple legs down to challenge an L3 and even potentially deeper. Over on the euro next, we've got that descending wedge, which is still continuing from the larger picture. This is just drawn a little bit on the nearer term. We've got a fantastic bounce off of the wedge lows. I mean, absolutely beautiful bounce. And we've got a higher low. I mean, it's doing everything that it should be doing for a continuation move, other than the continuation yet. And that's just because it's very early. Buyers are going to be looking for a bounce off of this zone. And really the most important thing at the moment for the narrower term is breaking down some of this falling resistance, get some of these patterns out of the way that are kind of holding the market down still. The market is still in a downtrend. There's no denying the downtrend. The only reason we're talking about buying down here is because we're at the lows of a wedge. That could be where a lot of sellers are looking to take profit. It makes a lot more sense for sellers to be looking for a pop back up, for selling right back down again. We've broken through the 1.2, realistically seeing a retest of the 1.196, or even maybe a little bit lower at the 194 would be a zone of resistance to shove the market back lower, especially if we can combine that with the top of the wedge. There are, some concerns with divergences on the lows, but we've only got the one so far, and it hasn't really it hasn't really confirmed yet, so we need a bit more info. It's just we're at a pretty big zone of support here. Then over on to Bitcoin, we have the bearish L5, which held off of the top and created somewhat of a kind of a left shoulder head. We haven't really seen the right shoulder yet. We're missing this. So we need a bit more info over here to give us that head and shoulders pattern. But from the wider perspective, you can kind of see if the market does start to turn down. They tried getting it here, but that didn't work out. So now we've got the wider right shoulder. It's still trying. It's just getting a little bit sort of gross. Sellers are holding the market off of the highs at this point in time, although they're not doing that great of a job. And realistically, buyers are trying to kick this thing back up into full gear. If we look at this on a more aggressive channel perspective, we can see that it did attempt to break through the lows of it and then immediately rallied back in. So from a higher low perspective, buyers would like to see the inside test of that and then another continuation. And you can also see how if we line that up as a wedge, all of a sudden we've got a lot of things that are stacking up on top of that 49,000 area. We've got the DP level, we've got the rising higher low wedge support, we've got the completion of the 3-press wedge bottom. I mean, you name it, it's all starting to build up into that 49,000. And then finally, over on Ethereum, we've got the nice continuation back to the upside, breaking back up to the 1750s. 1750s, we're no stranger to this price. This one has been a mess for quite a while. 1750 has been causing a lot of back and forth. Aside from the obvious 2000 level, we're hitting the next major zone. Rising channel support is very early. We only have really the first few points to kind of give us a clue. And, well, because of that, we need to see the market go back up to the highs, give us something that looks a little bit better. So in the nearer term, we do also have the slightly more aggressive channel kind of kicking its way up here. But you'll notice one thing, the market is not making its way down to the lows. And if we put it on the highs, it's consistently going above the top. And that's giving a clue that we might be dealing with a bit of a megaphone. So we've got some really kind of funky price action going on here, which usually means that we're hunting out some larger structure. If we zoom out a bit further, maybe they're trying to get a head and shoulders or a wider channel or a wedge or something. But the big obvious thing that we can see from the aerial, we moved all the way down. They tried to get a lower low. It did not work very well. Tried rotating into a higher low and now attempting to reverse back to the top side. So we can see what's going on here. We're attempting to get a much larger trend reversal going on back to the upside, which is likely why there's some confusion going on as to where price is right now. It would make a lot more sense to see prices dip back towards more of a value area around the 1500s. Alrighty, well that's going to do it for today. Like we always say, stay safe out there, keep those stops in play, and let the winners run. Have a fantastic trading day, and we'll see you in the next. Thanks.